Good morning, dear friends. It's my pleasure to welcome all the participants today for the panel session opportunities and challenges in STO, NFT, and DeFi. I welcome all the eminent speakers and guests from all over the world to share the knowledge and vast experience with the professional community. Today we will discuss what are the most interesting ways of decentralized finance being applied, what are the biggest opportunities, and what sectors do you think should consider implementing NFTs? What challenges do NFT face, and what are the prospects for DAO funds? How are DAO funds formed? Professionals invited on the conference will reply this once and the other questions. Now I'll ask the speakers to introduce themselves. Let's start with Felix Mago.
Hi everyone.
Hello, Felix.
Felix, pleasure. Thank you for inviting me. Great to be here with you all. My name is Felix. I'm from Dash, specifically Dash Next. As you might know, Dash is a completely decentralized network. So we are all around decentralized teams pitching into a DAO. That all sounds very abstract, I know. So let me try to break it down very simply. What we do, we're a payment-focused cryptocurrency that is built in a very unique way with all these teams all around the world. I think we're number one when it comes to cryptocurrency payments. By now, we're started in 2014. So we're kind of an OG in the crypto space. And I'm very happy to see crypto adoption, coming to reality now in 2021. We have just onboarded another 155,000 merchants in the US with our new app called Dash Direct. I suggest everyone to check that out. And yeah, happy to discuss, to help people to understand why this is so exciting. And yeah, happy to discuss with you guys.
Thank you, Felix. The next speaker is Tang. Hello, Lee. Could you introduce yourself?
Hi, Marina. Thanks for inviting me, and very happy to be part of the panel. I guess my background is in technology. I worked in telecom industry for about 10 years. Then I went into research, academic research. And as part of that, I looked into using blockchain and blockchain technology in general. Got really interested in 2017, although I started looking at it since 2014, because a lot of my other PhD students and professors started leaving the university and joining startups at the time. So I was like, wow, this is something's happening here, even though I don't know about the investment part of it. Now what I'm currently doing is really investing, more looking at it from an investment perspective. I manage my own family office fund, and I do advise certain high net worth and private companies in terms of how to manage their crypto, and also look at how to invest into cryptocurrency. It's relatively new, especially for family offices. So mainly from a technical perspective, but also looking at the broader market and giving them some analysis and see my point of view of how that goes. In terms of the why I joined this panel, I think it's very, very interesting, the NFT space, especially also STO. These are the kind of companies that I'm looking to invest in. In fact, I recently invested in an NFT company, Sport Moment. They're looking at bringing NFTs to sporting codes in Australia. And it's just so exciting in terms of what they're working on, and where they're going in this whole space. So very, very excited and happy to share my experiences in terms of securing wallets and those kind of things. Thanks.
Okay, thank you. And the next speaker is John Bassilios. Hi, John.
Hi, Marina. Thanks for having me. John Bassilios. I'm a partner at Wilcox Lawyers, and I sit primarily in the financial services team, but I do a lot of corporate commercial work. My day-to-day practice is primarily financial services, funds management, AFSLs, but I've also developed a bit of a niche in the crypto space, having advised people how to set up cryptocurrency funds, crypto exchanges, and providing advice on token sales. I'm also a director of Blockchain Australia, which is the peak industry body for blockchain and crypto in Australia.
Let's introduce Beck Jones. Hi, Beck. Could you introduce yourself?
Hi, Marina. Yes, of course. Thanks so much for having me. My name is Beck Jones. I'm the co-founder of Clutch, which is an early stage startup that is focused on building a crypto wallet for women. My background is in finance, in banking, and in marketing. I've spent the last 2 years as a CMO for 2 different crypto projects. The first one was a social media app called Vid, which paid its users basically who were using like a social media app, creating videos, sharing with the community in their native currency in crypto. And I've since, in the last year, started working for a DeFi project, which is actually an anonymous one. So I won't share that one with you, but being a CMO in both those spaces, and now starting to look to go out on my own and build my own company, which is trying to bring women into the future of finance, specifically focusing on education and really getting women invested into crypto.
Okay, thank you for the introduction. So, dear colleagues, let's start panel session. The first question I'll ask to Felix Mago, and the question is, what do you think needs to happen to drive usage and adoption of NFT and DeFi tools? How long will it take for this happen in your opinion?
Thank you. It's a fantastic and a very, very frequent question that I'm getting like all the time, because DeFi and all this crazy blockchain stuff seems to be very far away for most people. One tip I always give is just sit down and try it for 2 hours. Make yourself a little challenge. For example, have the challenge to get your first crypto on a crypto wallet, make a first transfer, buy, go to a DEX, install MetaMask. These are small challenges, and I promise you, if you take 2 to 3 hours on YouTube, you will master any of those. In terms of how long it will take, I think we're on a good way. That's the good news. I just said we connected 155,000 merchants with Dash, so you can, if you look at the global map where crypto is accepted as a payment, it's growing and it's all over the world. The downside is it's a bit, 2010 to talk about crypto payments, and now we are here in 2021, and now we finally have big news that now the corporations are coming in, which honestly, if you work in blockchain and if you work in DeFi, it's a very boring news, right? It's like, oh my God, it's like finally these guys are making it in 2021 to accept Bitcoin for a Tesla. Okay, it's like, it's super exciting, but at the same time, super unexciting, because the truth is we are right now already building the next financial infrastructure to, to get rid of NASDAQ and Wall Street. And we can already do it, without having any banks, without having anything in the middle. So long story short, I think there is no way that, that we are not coming to mass adoption at one point. When is even a bit, is it so relevant when it's going to happen? For me, it's a bit like the internet. We had 20 years before the internet, we had forums, we had games, and then suddenly email and AOL made it all go viral. We will have this point at one time in blockchain. When this will be, I don't know. What will be the catalyst? I don't know. But I feel all the payment options, the yield options, financial freedom, and now just recently we see all these NFT play to earn games exploding, where suddenly, like billions of people potentially can get a job by just creating an own job, by just playing a game, essentially, is creating a lot more opportunities for everyone. So I don't worry when it will happen. I think we're on a good and fast way. If you look at numbers, how much money is coming in, how many users are coming in, I don't worry at all that we are already taking off.
Good. And Lee, what do you think about the mass adoption of crypto and NFTs? What's your opinion?
Oh yeah, I think what Felix is saying was spot on in general. I think in 2007, just thinking back, there's a lot of the rails in terms of on-ramp, off-ramps, a lot of the, like, for example, payment options weren't that available, I would say. You can still do it, but it wasn't as easy to use for consumer. But now all these rails are in place, and also the community has grown. So I think that we're on the precipice of mass adoption. I would say that DeFi, it would be, in terms of using it for swapping and finances, these play to earn Axie Infinity type projects is very, very interesting. I think that just the fact that it actually has a use case for people is very, very exciting. That it hasn't really shown to be that in 2017, 2014, but now I think there's a lot more mass awareness of this, especially when in terms of the NFT for sporting codes that I mentioned, Sport Moment. I think a lot of people have heard of NBA Top Shots. And that's one use case, but what I've seen with startups and what they're working on now in terms of how to monetize brands and monetizing, sporting fan interactions with via NFTs is very, very exciting. So all of this is very positive from my perspective, and I think there's a lot of investment opportunities in those spaces.
Good, but how you should hold and safeguard your crypto assets from the loss?
Okay, yeah, so I think that's a very big topic. My research is in human interactions in my PhD, and the problem is that everybody have different levels of knowledge and technical expertise, and so if I'm talking to a big audience, I suppose, I think that in general, you're much more likely to lose the passwords and your private keys for most people. So I would suggest in terms of if you're talking about safeguarding your crypto asset, especially if it's a percentage of your wealth, I would say that you use a custodian. I use a company called Zero Cap. They're Australian-based. I like to support Australian companies. They're Australian-based, very secure, has actually one of the only companies that have insurance on crypto assets. So if you have a sizable portion of your wealth in cryptocurrency, I would say do that. Obviously, play around with self-custody, understanding the processes, and only do so with when you're very confident at storing and holding your own cryptocurrency. So I understand that there could be concerns with trusting, centralized exchanges, trusting a third party with, your crypto assets. And I think a lot of people in the crypto community are kind of like that, very libertarian type thing. But I would say in general, unless you're very, very confident, you're much more likely to lose your access. Imagine, and a lot of people don't really, generally the crypto investors are quite young and they don't really think about estate planning. So what if something happens to you, and how would your loved ones and your family actually get access to potentially a large amount of crypto asset? So I would say that, do your research, don't think that you can handle all these yourself until you're very confident and practice at it. As Felix was saying before, you can learn how to do all this with a few YouTube videos, but to be systematic and secure with handling your own large amount of assets, that it's better that you use a professional first until you become very confident. And it's very interesting, actually. Your later when Rebecca, there would be a question for Rebecca in terms of in the third world, or in a lot of situations for women, having custody is actually, or handling your own cryptocurrency is actually could be an issue. So that would be a very interesting question for her, because how there are some situations where it is different between men and women in terms of how they need to secure their assets, their crypto assets. So that'll be an interesting thing to talk about. And NFTs is essentially technology-wise, it's very similar to securing any other crypto asset. It's essentially, most of them are Ethereum contracts. So that's why I don't separate them when I talk about NFTs and general crypto assets. Yeah, I hope that answers your question.
Okay, thank you. And now I would like to ask a question for Beck. Beck, you are a founder of Clutch. It's a crypto wallet built for women to invest in digital currencies. Clutch is a way to invest in digital currencies, yes. And what was been the most exciting thing or experience you have come across your journey? Have you seen an increase in interest in crypto and blockchain by females in the recent times?
Good questions. I think, look, we're early on in building this idea out, and especially in doing some research, and that's been the first kind of port of call that my co-founder and I have kind of looked into, which is getting as much data as possible into females, their current experience, how they're thinking about money, what kind of money they have put aside in terms of savings, how they're thinking about investing, and what their perception is around crypto, and kind of reasons as to why they may or may not have considered kind of investing in it. So for us, the research has been the kind of first port of call, and the data that's starting to come back in is very much leaning towards education being the prime kind of core reason as to why women haven't engaged into crypto yet. They just really feel like they don't understand it. There's a tidal wave of information to get across, and they don't know where to go to first. So for us, that's been a really interesting insight. And I guess in terms of thinking about a crypto wallet for women, what kind of features we're going to be launching with, is it going to be a transaction feature first? Is it going to be a learn and earn? Is it going to be some kind of community chat room? And I think, from what's coming in, we are leaning towards more of a learn and earn to kind of get that base education. And that's something that we're kind of building out already. We've started with a Facebook group, onboarding women into that Facebook group and starting to share resources and educational kind of modules from our website to start taking them through a kind of education series, which is tailored towards very kind of base level understanding of investing, of money, and of crypto. So that's probably been like the most insightful piece of research that we've found that we've done ourselves. But since I've kind of started looking into this idea more recently, there has been a study that came out in August by CBNC, and they surveyed in America around 5,000 Americans, and what they found was men were twice as likely to invest in cryptocurrencies. They found that the gender gap is actually bigger in crypto than it is in traditional finance, and they found that white women investing in crypto outweigh Black women that are investing in crypto by 15%. So there's definitely some kind of big disparities there, and for us, that kind of just reconfirms this is a real issue. This is something we're really passionate about, and we're really glad that we're kind of on the right track to addressing an issue, hopefully.
And one more question: what UI UX works is needed to make crypto products more user friendly?
What UI UX? Yep.
Yes.
Yep. UI UX improvements. Where do I start? This is a bit of a bugbear for me, and I think the crypto space has built really quickly, and we've had a strong kind of 10 or 12 years of growth, and possibly the design aspect and experience aspect for investors, users of products has been lagging a little bit. For a lot of people, they're coming to exchanges, they're coming to new products and getting really overwhelmed by the data and information. And I think thinking about going back to education and thinking about where people are coming from and how we can tailor product experiences towards the user and understanding actually where they're at, and possibly creating unique experiences as they're coming onto platforms, whether it's through education or kind of understanding where they're at in their kind of education journey, so that when they're coming into products, it's not this kind of overwhelming tidal wave of information. I think simplicity as well, like for example, you land on a site like Binance and there's just so much going on. So, you know, looking at products and how they can kind of simplify the user experience to kind of make it more straightforward for users.
Okay, thank you. And now I would like to ask a question for John Bassilios. John, what do you think about needs of education users for mass adoption of crypto? And could you tell us what are security tokens? Why do we need to speak more about security tokens, John?
Yeah, from a security token perspective, I think that's an important discussion to have, because the way I see it, I think that traditional securities are going to be the way of the future in terms of being blockchain-based and tokenized. So I think that's just the way of the future, and that all securities will be blockchain-based and tokenized. But a question arises in relation to any blockchain-based token as to whether or not it is a security. From a commercial perspective, a lot of people refer to payment tokens or utility tokens and assume that they are not securities. However, an analysis needs to be undertaken in relation to the actual features of each particular cryptocurrency or token or whatever you want to call it to determine whether or not it actually meets the criteria of a security. And there are securities laws in all jurisdictions around the world, and there's no uniform definition. So it's something that you need to look at on a jurisdiction by jurisdiction basis. But a really good example of that is XRP. So XRP, I think, you know, the crypto market sees that as a payment token and not a security. But the regulator in the US is actually taking action at the moment, making a claim that it's a security. So it's not an area that is, I guess, black and white. And I think that the way that issue will be dealt with in the future going forward is to have crypto-specific laws in each jurisdiction which define what constitutes a non-security token as compared to a security token.
Okay, and how security tokens differ from utility tokens or normal currencies? Could you explain for our audience?
Yeah, sure. So as I said before, it really depends on the definition of what constitutes a security in a particular jurisdiction. What generally differentiates a security token from a utility token, and this is an obvious example, is where there are voting rights or a right to income that are generated by just virtually holding that token. But it's a bit more technical and complex than that, because for example, in Australia, we have the concept of managed investment schemes, and in other jurisdictions, they might be referred to as mutual funds or collective investment vehicles, whereby there isn't necessarily a criteria that you actually have a right to revenue or that you have a right to vote, and you can become a managed investment scheme and therefore regulated and need licensing. If you meet if you meet three different criteria in Australia, it might be different in other jurisdictions, but people pull money or money's worth in order to generate rights or benefits or interests in the scheme, and they have no day-to-day control over their contribution. That's a definition that's really easy to meet, so it's really difficult to get around the concept of what constitutes a managed investment scheme under Australian law, and I imagine similarly under other jurisdictions. And I think the way that needs to be dealt with is that we introduce specific laws that define what constitutes what is commercially referred to as a utility token, so that the designers of tokens have that in mind.
Okay, good. And how do you see CTO involving in the near future?
Look, I just think that it's the way of the future with respect to all securities. So what we refer to as traditional securities these days, or it could be shares in any company or interests in a fund. I think it will all be tokenized and it'll all be on the blockchain going forward. And that's independent of the concept of, you know, when a utility token might otherwise be construed as being a security. I think we're going to see that all shares and all financial products in the future will be tokenized and on the blockchain.
Okay, thank you. And now it's time to speak about decentralized finances. I would like to ask the question for all the speakers. What are the most interesting ways of decentralized finance been applied?
Oh, look, I'm probably not the best person to answer that question, but I can see that decentralized finance certainly has a place in the future, and it's. I think it's catching on very slowly, but it is also a bit of a threat to existing centralized finance systems. One issue that we really need to contend with when we talk about decentralized finance is whether or not, notwithstanding that it is decentralized, is it otherwise still subject to existing financial services laws under the jurisdictions of each country? And I think it's an important question to be asked in the context of talking about DeFi, because a couple of years ago, the SEC took action against Ether Delta, which was claimed to be a decentralized exchange. But they went after the person who effectively set it up, saying that they were the mind and controlling mind and person behind it all. Even just last week also in the US, I think the regulators there came out and said that they're looking at investigating Uniswap and whether there are any breaches of securities laws in the operation of the Uniswap platform. So yeah, I might pass on to someone else who has something else to say about DeFi. Thanks.
Thank you. And Felix, do you agree with John? What do you think about of decentralized finances and the sector of crypto business?
First of all, I think we are in a very fantastic panel here. John coming from a legal lawyer perspective, Rebecca being part of an anonymous team and we don't know what, and I don't even want to ask what it is, but it already shows where we at, right? And everybody has a fair perspective. If there's a right or wrong, I don't know. My perspective is definitely different than the perspective from a lawyer, I guess. I think the first part for DeFi to understand, and this is exactly the analogy for what I said before with the internet, right? We realized, cool, I can send an email back in what, 1996, 1998. And 10 years later, suddenly, you know, you can build like Facebook and then you can build Uber, and who would imagine that in 1998? So I promise you the same is going to happen with blockchain, because now we have a completely new way to build business models. So let me give you an example. The whole, you know, world economy is depending on trading stuff from A to B, be it Forex, be it stocks, be it derivatives, it doesn't matter. So, you know, there's like huge markets for euro, dollar, for example, or, you know, whatever. And all of these infrastructure so far is relying on intermediaries, right? So there's like a stream of value. If I trade US dollar versus euro, I pay a fee, and that fee goes usually to the exchange where I traded on. The same happened in crypto. Now suddenly we can build financial products that don't need a bank, that don't need these intermediaries. So what is happening that we can take this money that I paid for a fee, and we can use it in a different way. What Uniswap has done and all the other DEXs are doing right now is that they're taking this fee and essentially redistributing it to the users, right? So it's not the exchange anymore that earns money from the fee, it's the users. And that incentivizes people, because people are not stupid. They see that, they can see they earn money from other people trading, you know, Ethereum versus Bitcoin on Uniswap, and they can make they can make an income out of it or a buck out of it. So this is why it's happening. This is why it's massive. And the same principle goes for a million things around DeFi, right? It's everything from taking a loan to, you know, buying an investment product, to buying a futures option, to whatever, right? So it's already happening, and it's already happening in a massive scale, even though it's completely unregulated, as, you know, John might critique. I said before, you know, now regulators are talking about regulating payments and how to pay taxes on Bitcoin in the US. Like, yeah, okay, no, we are already trading derivatives from Facebook on, you know, on Mirror, for example. So there's a lot of things happening right now. long story short, it's happening. I think it's not going away, and it's really about understanding these new business streams and these new business models that come with it. I have no doubt, that it will take off. And right now there is a million different, I would rather say, niches, for people to go in on different blockchain with different products. But there's a growing community of people that make money and businesses that understand how to create something on it. And I think we are, on a long way still to go to understand what are the best practices in this business creation. And where I definitely agree with John is that regulation is good when it comes to user protection. And this is definitely something where we're very far away from right now. There's a lot of risk involved with everything. I mean, I'm super hyped about it and I'm super convinced it will stay. But as of now, there is high risk involved. Lee also said it great, right? Like use professional help to save your assets. But if you put your money in a DeFi smart contract, even professional help will not be able to help you, let's be honest. So, it would be good to have some regulations, but there's crazy topics. Another one, maybe last point I want to make is DAOs are taking off, and staying with the example of Uniswap. I mean, just look at what they did. They released the governance token, and they put aside some of this governance token to fund different projects. Right now, they have around, I think, 40 or $15 billion laying around, right? So just think about what they did. They created a token out of nowhere, essentially airdropped it to a lot of people, put aside 15 million, and now everybody in the world can apply for this money. So one group just came in and said, hey, how about we are paying some money to lawyers that now help us figure out how to write the laws for DAOs that currently don't exist, right? I mean, the question is how to regulate a machine in the internet that is unstoppable. And, it's a difficult question. So we're on the way, hopefully, to get it answered.
Okay, and let's speak about NFTs. Some of the businesses might be interested in NFTs, but they struggle to get the basics and where to start. What is the best approach to start investing in NFTs?
Yeah, so I think with NFT investing, so I'm looking at all these DeFi and crypto and NFTs from the perspective of an investor, rather than, let's say, a protocol builder or an institutional regulator. So from an investor perspective, I'll just go back to talk about a little bit about how I see the DeFi space, and then that'll tie into the NFT. In that, I think that it's massively bullish for regulators to actually look at regulating, because it does look like regulators, in 2014, 2017, there's just been regulators just shut things down, right? They're very negative because they're afraid of people getting hurt, getting wrecked. And now the industry is, $3 trillion, $2-3 trillion. Regulators are coming on board, having a look. And I think that from an investor's perspective, this is what you want. You want people to know exactly what you're buying and what you're investing in, and you want the certainty of clarity of what regulators and governments see as a asset or as a security token. So now coming back to the NFT space, this is a very I think from a getting started perspective, it's actually very easy, right? You go onto a website and you buy a digital art, or you buy the NBA Top Shot moment. Essentially, what you're buying is a signature of a video, and in many ways, it is very similar to buying, in my view, buying, let's say, collectibles like baseball cards, basketball cards in the past, except this is on the in digital on the blockchain, and there's a whole industry that has grown from this. Now, from an investor's perspective, we can talk about the utilities of it, but from the investing perspective, this is it is still very early, I would say. So I myself only dabbles. I just buy some just to play around with. I wouldn't invest a lot of money into it. again, the reason is that I don't really know the regulatory perspective, from the regulatory perspective, how these are going to be treated. So, for example, art. Let's say if you collect fine art, in many cases that is not treated as a financial product or an investment. It's treated as personal property. Now, how is that? If you invested $1 million in an NFT, how is that going to be viewed? And if you traded that, or if you traded derivatives of that, what does that mean, right? So this is it's all very interesting from my perspective, from the investor perspective. But I would say that it's still very early. If you're if you're looking at NFTs as more of an investor rather than, let's say, someone who really likes the digital art or something like that. Yeah, so that's my view on it.
And how can you make money of NFTs? Could you share any cases?
Yeah, there has been. I mean, people make a lot of money from selling anything that other people value, right? So that's kind of if you're talking about making money, is you're buying something at a certain price and selling it at a higher price. So if you're talking about making money as an investor, which is this is how I would look at it. Now, if you're an artist, or if you are a musician, or some kind of creative person that actually creates this, or if you're a brand, let's say you are like an MBA or certain things, what the NFT really does is it tokenizes your brand, or tokenizes the value of what you provide. So I think that will be different. That is how you will make money as an artist. But as an investor, is essentially, from my view, it would be like buying and selling any other asset, buying a piece of fine art and then holding it for a number of years or months and selling it on. That's how I see that from that perspective.
Marina, I can jump in there.
Yes.
I've actually got an example of a way that one of the projects I worked with used NFTs, and the investors in those NFTs had more of a recurring income from them. So while I was working for Vid, which was the social media app I mentioned before, the investors into Vid, they purchased the buy token. And after that token sale occurred, there was a second sale of NFTs, which were basically the hashtags that were used alongside of the video content that users would upload. So the way that it worked was any of the users on Vid would create a video for the day, and they could attach up to 3 hashtags alongside of their video. For each video, you would earn some kind of income from the daily distribution, and the hashtag owners, basically the hashtags were listed on OpenSea, and our investors were able to purchase those hashtags. And since then, whenever those hashtags are used, they get a small percentage of the token that's paid out to the user. So that's kind of like a unique example of that an NFT has been used in a crypto project that's been able to provide kind of recurring income for those investors.
Good. And I would like to ask a question. What challenges, in your opinion, do NFT face? Investing is a good opportunity, but what are the challenges?
Yeah, so actually, I would ask that question about that example that Rebecca just made, in terms of if I was to purchase that NFT and I earn income from it, is that a security? How does John see?
It's a really good question, and I don't think that the law is settled on it. I think that NFTs where there is no income attaching to it, and it's one person owns a particular picture or whatever it is that is the NFT, I don't think there are any regulatory implications there. Where you have regulatory implications are where there's a number of people that own a particular NFT. So then there's a collective ownership. So that potentially raises regulatory issues. and where there are royalties attaching to a token. Again, that's where you have regulatory issues and where you're at risk of it being a security. Now, that's kind of the theory, but at this stage, luckily, and maybe because it's only a new concept, I'm not aware of any of the regulators having taken any action in relation to NFTs at this particular point in time. But I would say it's watch this space with respect to NFTs that have royalties attached to them.
Yeah, also just on that, I remember CryptoPunk, the company that made CryptoPunk, they actually hired the talent agency to promote the NFTs, right? So that to me sounds like a collective investment action, you know?
Well, but isn't it though that the person who buys a CryptoPunk, they own, like it's one person that owns the particular token, as opposed to a collective of people owning a particular token?
Yeah, so they are promoting CryptoPunks, or they have agents. Essentially, the agents are promoting and placing those CryptoPunks into movies, and I imagine into movies and music videos and such. So each NFT is unique in a way, but there are NFTs that sold. Let's say, I'm not talking about CryptoCoin in general, but like specifically. But let's say you have a NFT that has 10 issuance or 100 version of those, 100 of those. Although each one is unique, and one can argue each Bitcoin is unique. How is it going to be, viewed? That will be unknown at this stage. But that's why, like as an investor, I hesitate because it's not clear, right? What it means.
Yeah, but in the example that you give, I think it is relatively clear that it's not regulated, where one person owns a particular NFT, or if multiple persons own a similar NFT, I don't think that raises regulatory issues. It's only if, one, there's a royalty stream, or two, there's a number of people that own the same NFT, which is rare as far as I understand it. Because it's just like it's owning digital art, right? If you own
I think
art
the
or digital art,
of it
shouldn't. Sorry, what was that?
Sorry, sorry to interrupt. What I was thinking just now is, if someone created a derivative of, let's say, the Beeple $69 million NFT, and then start selling that token, potentially that could be considered a security token.
Yeah, definitely. If you create a derivative out of something, that's definitely going to be potentially regulated. And that's something that's actually on the radar of regulators in Australia and overseas, where crypto exchanges are now offering crypto derivatives. So the securities regulators in relevant jurisdictions are going after the crypto exchanges that are offering crypto derivatives. And I think it was just today that Binance announced that they're going to stop offering crypto derivatives in Singapore.
Yeah, also Binance got in trouble with offering those share tokens. I think they delisted those as well.
Security tokens, yeah.
Yeah, that was quite obvious that was going to happen, actually. But I'm surprised they did it.
Super interesting, guys. I think from my perspective, the challenge is to make people understand what the hell we are even talking about here. And there's so many use cases. I mean, honestly, I even think we should go away from, like these nerdy terms like NFTs and blah, 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 because there's a million different things you can do with it. Let me start with a few examples. You mentioned art. Obviously, I can now create a piece of digital art and tokenize it, or create a real art and make a photo of it and tokenize that in terms of a unique identifiers. And this piece of art, there is one original, and it's not the copy from a digital product. So this is the first thing. But there's also many, many other things you can do. Gary Vee just came out with a huge campaign to say, I'm running a conference. This conference has 1,000 tickets. So I'm selling exactly 1,000 NFTs. And now some of these tickets are just a normal ticket to enter the conference. But some of these NFTs, let's say 900, are just a normal entry ticket. 50 of them will give you access to the exclusive VIP party with Gary. I'm just saying it. I don't know if that's really the case, but the principle is like that. And one of the NFTs will give you a private dinner with me after the conference event, right? So you can like really make an event, you tokenize that event, what you usually were selling entry tickets just in a different way, right? And then you can buy, everybody can buy this NFT and trade it with someone else. So it's a completely different use case. Then we just talked about where it becomes even more crazy, right? Like you can, it's all about playing a game, but in order to play this game, you have to buy a team of 3 NFTs. And these NFTs are called X's. These are little monsters and so in order to play a game, I need to buy 3 different monsters that are unique monsters and don't exist 2 times in this game. So everybody has this, so in order to play, I have to invest in that. And then, if I don't want to play anymore, I can sell them on an open market. So there's a lot of completely different use cases with these NFT. But now I guess the problem is even less a regulatory problem as of now. It's number one, make people understand what the hell is even happening there. And again, it takes time to digest that. And there's a million different use cases where the story is completely different. The second question I realize it's even more challenging right now is how do I pay taxes on that stuff? And for that, depending where you are, you will have a completely different answer. In the case of X's, it becomes even more complicated because now you buy an NFT, you play a game and you earn SLP and ERC20 token on Ethereum that you can then sell. So, it's like you play a game. So I earn a reward from the game that normally would be some fantasy game money. And of course, I don't pay taxes on fantasy game money, but now this fantasy game money can become real money. So, how is that? And depending where you are, you maybe should stay away from playing X's because it will get you into big trouble with your tax advisor. In some other parts of the world, you just do it. The Philippines, for example, we're just discussing on a law because now so many Filipinos are playing this game. So now the government is smelling tax money coming in and already started regulating. So it's a complicated world out there, but if you break it down to something specific you can do with it, it becomes much more tangible.
Okay, and I have one more question about regulatory and risks. Have you heard about the case with Rammstein headliner Lindemann and St. Petersburg's Hermitage? Lindemann tokenized his song and video from Hermitage Museum in Russia, but Hermitage told that Lindemann hadn't license to tokenize this video made in Hermitage's interiors. How to protect the interests of NFT holders in this case if Hermitage Museum will win the judge? What do you think about this case, John?
Sorry, I'm not sure I understood everything that you said there, and I'm not familiar with the particular matter, but I think the issue that you raised is that someone has issued an NFT, but the actual original artist didn't license the IP attaching to the NFT. Is that what you said?
Rammstein's headliner Lindemann created an NFT. This is a video made in interiors of State Hermitage Museum in St. Petersburg. Hermitage officials told that Lindemann hadn't license to make this video and to tokenize it, but Lindemann sold his NFT made in Hermitage for more than $100,000. How a new NFT owner can protect his interests if Hermitage will win the judge, and if this owner would like to resell this NFT?
Sorry, I'm not sure still that I fully understood what you're saying, but I think what you're saying is that someone created an NFT without having a proper license to do so, and you're asking how the purchaser of that NFT can protect their interest. They can't protect their interest if it was never properly licensed in the first place. Does that answer your question?
No, not. Do you know Rammstein group?
I don't.
It's very popular in Europe, and the headliner of Rammstein group with millions subscribers in Instagram created NFT. This is a video made in Hermitage State Museum in St. Petersburg, Russia. The officials of the museum tell that Lindemann hadn't a license to tokenize this video. The video made in Hermitage interiors, masterpieces of Hermitage Museum are placed in this video. Hermitage will have a judge with Lindemann, but Lindemann had already sold his NFT made in Hermitage Museum. How a new owner can protect his interests if he would like to resell this NFT?
You can't. If it was not properly licensed in the first place, you cannot protect your interest.
Yeah, I think even technically, from a technical perspective, there's nothing that you can do because of the transaction and the custody. But I think it goes back to the question of what is an NFT, right? Because the NFT itself didn't really make a copy, like unlicensed copy, like a CD. All it did was it's like a stamp of the of that video, right? So I would say that it's probably they couldn't get anything back in terms of, unless they sue them directly or something. I don't know the legal what the legal ramifications are, but technically there's no way that they can recover because in the first place, I don't think there is anything to recover from a technical perspective. It's literally.
The possibility is this: if I followed the facts correctly, the museum would museum would sue the creator of the NFT for royalties for using some of their IP, and then the person who purchased the NFT would sue the person who sold them the NFT for selling them something that didn't have all of the correct intellectual property rights attaching to it.
Okay, good. And it's time to finish our panel discussion. I would like to ask every participant to answer one more question. What advice would you like to give for the audience, people who would like to invest in NFTs, in STO, in crypto?
Do your homework, research, and learn a lot. I guess it's easy as that.
Good. And Beck, what's your?
Yeah, I guess I would echo Felix's suggestions to kind of add to it. I think you've got like a plethora of different media sources available, and it's really easy to get stuck in an echo chamber that reinforces your investment or what you like to believe. So challenging your biases with looking at Twitter, looking at media articles, jumping into Telegram groups, looking at Discord, looking at Reddit is going to get you across a whole range of different perspectives and opinions. It's going to take a lot of time. Making sure as well, on top of that, you're looking at actual financial data. So going onto CoinMarketCap to actually look at the data side of what you're investing in as well, I think kind of gives you a holistic view of what you're investing in. But actually taking the time to do that is timely, and we don't yet have a space that kind of brings all that together. So that would be my advice.
And Lee?
Yeah. So from an investor perspective, again, if your cryptocurrency, NFTs, all of these are highly volatile assets. And the solution to volatility is what I always say is, or a lot of people say is position sizing. So make sure that you don't invest more than you can lose. That would be my number one advice. And number two would be to keep a good track record of everything that you do, because let's say if you do invest something small and whatever you invest in blows up, become very expensive or become very valuable, there will be tax implications, there will be regulatory implications, especially if those become really valuable, and you need to have very good records, especially provenance of where did you get that cryptocurrency, what did you do with it? So those are very important records to keep. So I would say that's the other thing that I want to add here.
John?
Probably don't have any specific advice to add for investors in addition to what's already been said, but if anyone's sort of involved in any project, I do recommend that you get legal advice up front just to tick off and deal with any regulatory issues that might arise.
Okay, thank you. Thanks everybody for participation in panel discussion. Goodbye for the audience.
Thank you so much.
Thank you for
Thanks,
attention.
Marina.
Thanks, everyone.
Bye.
Yeah.
Bye.